Welcome back, folks. I am John Najarian, and today we will address whether or not Domino's is the canary in the coal mine. Are all the dominoes going to be falling in line? Are Americans starting to cut back on even pizza? Well, we'll have the 411 for you on the Rebel's Edge. Bang! Well, welcome back, Pete.
All right. Feeling better. I don't know what I had. I'm happy to be rid of it, mostly, not all, but it's good to be back. Alex did a fantastic job. He really is a great guy, and I appreciate him stepping in. That was great.
Yeah, you weren't hanging around with Joe Biden, were you, Pete? Is that how you maybe got sick?
No, I was not with President Biden. No.
my favorite cartoon or meme lately, Pete, is the one of President Trump holding the fist up after the attempted assassination, saying "fight, fight, fight," and it says Trump versus the bullet, and then it shows Biden with a big Kleenex up his nose, and he's like, it says Biden versus the cold.
Well,
you can't make this stuff up, and people don't even need to, because for whatever reason, these two characters can make content out of nothing, Pete.
They are. You use the right word too. Characters.
Characters. All right. Well, we welcome all of you characters to the Rebel's Edge. We're going to dive right into the macro minute, Pete. I'm going to say the ECB deciding to keep interest rates unchanged in July. That was in line with expectations, but it means that maybe they're a little worried about inflation still, Pete, and that's why they didn't cut rates. What do you think?
Yeah, that's pretty interesting. I think that what I find the most macro for me right now, John, is just what we're seeing from a rotational standpoint, especially when you look at the NASDAQ versus the IWM, the Russell 2000. The Russell 2000's up 4 or 5% over the last week, and you look over at the NASDAQ, it's down 3 or 4% over the last week. I think that stands out, and there's also a big volume discrepancy here as well. You're not seeing the kinds of volumes in the triple Qs as you are when you look over at the IWM. As a matter of fact, the IWM, John, averages about 27 million contracts a day or shares a day, 64 million yesterday. Gives you a little bit of an idea of the activity levels that we are seeing in some of these various names. And I think this rotation, are they done? I have no idea, but not done today, that's for sure.
Yeah. Well, let's dive into fantastic futures, Pete, with, I'm going to say copper. Dr. Copper, because it's got a degree in finance. I don't know how many times I had to listen to that moronic statement. But copper is used in an awful lot of industrial products, folks. And it has basically been all over the place this year. Copper has rocked to the upside and rocked to the downside. Today, it's a downside move, Pete. Copper is down almost 3%. So we're going to keep our eye on that. I think there's some trouble because China's not been stockpiling this like they would, because their economy is not moving like they thought it should.
Right. Well, I'm going to jump right into volatility. The VIX, John, the volatility index of the S&P 500. You know, it's been stuck in the 12s. We've talked about it. You know, we talked about sticky inflation, talked about sticky gold, sticky silver, all these different things. What's been sticky is volatility until this week. And then all of a sudden things have sort of changed a little bit. We're not in the 12s like we've been in the last month and a half, either a little below or a little above, not much, but basically in the 12s. Well, today we're over 16. That's a big jump. And that tells you one thing: volatility is here, and volatility is easily seen right now when you're taking a look at the S&P 500. The moves have been all over the place, up and down in a single day, up and down, just crazy. And I would say this: you're looking for about a 1% move on a daily basis if the volatility index is around 16. So keep an eye on that S&P 500, obviously being influenced a lot right now by the NASDAQ.
Well, folks, we're going to dive right in because we're pressed for time today. We're going to dive right into Taiwan Semiconductor and NVIDIA. Taiwan Semi exceeded revenue expectations 1.4, whatever, $1.48, I guess I should say, Pete, per share versus $1.41. That's the bottom line number. Top line number beat by 600 mil. And then you've got NVIDIA, basically the Xbox integrating their GeForce now for cloud gaming and so forth. Two bits of information that are helping drive those two stocks today.
Yeah, looking at that Taiwan Semi, John, it's absolutely incredible. Those numbers were great. You look at that earnings number, that's outstanding, 148 versus 141. They beat on the revenue, as you mentioned as well. I would just add that initially, right out of the gate, you look over at the TSM, it was trading over 178, actually close to 179. And then it pulled back. And the next thing you know, here we are trading around what last I looked was about 167. So we are seeing some of that movement, and it just doesn't, even with earnings, it's not sticking right now. They're punishing these Qs. They're punishing the semiconductors specifically, and that selling just continues, it seems like, day after day. We just talked about that with the triple Qs versus the IWM. That selling has not gotten relief yet, and maybe it will at some point, and maybe UOA will be able to lead us there when that happens.
You know it will. We sure hope so. UOA, unusual option activity, folks, if you're not familiar. All right, let's talk about Domino's. This one, Pete, as we said, top of the show, showing a big decline. Right now it's down 13%, basically trading through the low of the year. It began the year, I think, at 412 or so, Pete, now at 410. That's round tripped from a nice run up through 500 to falling. Why? Well, challenges, they say. They're not going to open as many new stores. The revenue growth, they think, will be up 7% or so. But you know what? They're just not going to make as much money. Why? Inflation. How much of that can they pass on to the consumer? Well, that's one of the issues, because even though the revenue number might be higher, their internal costs of the goods they provide, and perhaps for the workers that they employ, aren't letting them make as much money, Pete. And that's why the stock is down on triple normal volume.
Yeah, I was just about to say that volume number is absolutely incredible, just to see how much we're seeing that turnover right now. They did miss on the earnings, but it was still up 7% year over year. So depending on how you want to view things, I would say this. Did they beat on the earnings? Yes, they beat. They had a 403 versus a 368. So across the board, pretty good. But you were talking about guidance. That is where people are very nervous. And I think because they're looking at it and they're saying, hey, look, why are we stalling? Why are we not going to open as many stores as we had planned on opening? That was built into what we were looking at here, and revenue growth. To your point, John, the problem is inflation. The problem is it shows you that the economies are not that strong right now, especially internationally. But nonetheless, I liked what we saw from a numbers perspective, but you still have to look forward enough to say, hey, if they don't have enough stores, that revenue number is going to be coming down. And it's something that I think Domino's is going to have to show us that maybe that has changed. Not this quarter, but maybe next quarter, maybe the quarter after that. We'll see how that thing all flows around. But as of right now, that stock is under pressure, down about 12% or more.
Yeah. And Pete, they aren't exactly the next stock we're going to talk about, which is Darden. I mean, they sell pizza at Domino's. I know you guys all know that. But this one is the Capital Grill, DRI, Darden. They have Olive Garden, Cheddar's Kitchen or something like that, Bahama Breeze, Eddie V's Prime Seafood, all these kinds of things. These are higher end offerings at Darden. Well, they're doing a deal to buy a Mexican chain, Pete, called Chuy's, and they're paying a fortune for it, $600 million. Do they have a nice footprint, and do they have a nice product? Apparently they do. But wow, they are paying a big premium. And when anybody pays a 40 or 50% premium over the last traded price, that means that they don't want somebody outbidding them after they have basically ferreted out what they think is a great deal for them going forward.
Yeah, I like this as a nice tuck in. That was something that Wells Fargo talked about when they were analyzing how this whole thing went. I like it, John. I think it makes some sense. Are they paying too much? Maybe a little bit more than maybe expected. But to your point, you want to have your best bid in there when you have a bid in there, so that you know if somebody else wants to pay more, you're probably going to back away and say, all right, now it's yours. But those shorts were getting killed today. We were talking earlier, we were looking at this thing, and it's like, how if you've got 5, 6, 7% shorts in a stock that's up 48%, those guys are in a world of hurt today, because this is a jump that it jumped and it's just held on to it. So interesting to see. Tex-Mex, I think it's like 17 states that they're across the southern states, right out of Austin, Texas. This one's pretty interesting. I think this is probably a nice tuck-in. As the analyst was saying, inorganic growth is okay by me. Yes, you always want to do it as much organic as you can, but sometimes the inorganic growth, this company is there, it's ready to go. And if they can get underneath the DRI umbrella, I think they've got a shot.
Yeah, well, the short interest has been growing, Pete. I mean, the last short interest in middle of June was about 900,000 shares. It went up over 1.1 million, and I don't even have the latest. I got to believe there is a lot of pain in this one, a stock that's up 48%.
Yeah.
All right, let's hit Pete. Infosys, INFY, big move to the upside, surpassing financial expectations. They beat top line, bottom line. The CEO basically projected strong growth going forward, Pete. I don't know how much more we need to say about it other than, hey, they outsource tech. And for a company out of India that outsources tech, Infosys seems to be in a pretty sweet spot.
And the sweet spot is right, because you look at the balance sheet, it looks phenomenal. The cash to debt, $2.3 billion. The free cash flow, $1.4 billion. Stock hit 52-week highs, up 9%. They did just about everything right. I don't think you can look at anything in this particular earnings report and point to it and say, yeah, but that's not going to happen. They raised their forecast, their revenue growth 3 to 4%. The client spending is stabilized. It's no longer dropping. Clients are coming in. They stop dropping. And actually, if they start moving again, that revenue number goes up. I think for all those reasons, this is a really, really interesting stock where it is right now. Probably a little too cheap, quite frankly, even though it's at 52-week highs.
All right. Well, what do you got for us in sports, Pete? I'm sure you've been chomping at the bit to get back here and give us the 411 download on sports. So please do.
All right, we're going to jump to the WNBA and Caitlin Clark. And I know that this conversation has been going on forever, but the thing that people don't all probably follow is this. They had a $60 million deal with the media. Well, it's suddenly gone to $200 million deal per year. And it's only, 11 years, $2.2 billion, John. Not so bad. Why do you suppose that is, Caitlin Clark? Anyway, when you look at what we've got with the WNBA right now, they should absolutely be the nicest people in the world to Caitlin Clark, because she has brought the attention level at every single, whether it's the season tickets being sold at home or every single game that's played outside of Indiana. Minnesota here, 19,000 people went to that game. 19,000 to a WNBA game, John. You've got a great team yourself in Chicago with Angel Reese. Anytime those two are on the court together, and this whole thing that they had in college and all that stuff at LSU and Iowa, let me tell you something. Caitlin Clark is getting paid $76,000. She was making over $1 million NIL when she was at Iowa. She could have gone back one more year, by the way. She didn't. But she's making so much money, John, everywhere else. And now, how are these players feeling about the fact that we've gone from $60 million to $200 million? They better feel pretty good, and they ought to point to the money honey. And the money honey is Caitlin Clark.
Yeah, and surprisingly, though, the WNBA continues to shoot itself in the foot, Pete. Mm-hmm. They have stars like Caitlin Clark, like that gal last year that won the three-point shootout, set a record for the WNBA in three-point shooting. She wasn't invited back for three-point shooting this year. Neither was Caitlin Clark. So WNBA, look at yourselves in the mirror, guys, gals on that board, and figure out what exactly is going on if you're not putting your biggest stars out there. It's not like Caitlin Clark said, no, I won't go out there and shoot threes. It's not like the gal that won it last year says, I don't want to shoot threes anymore. Anyway, what else you got, Pete?
All right, NFL training camps. I think what's really interesting here, John, is over time, it used to be the greatest thing in the world. The Vikings went to Mankato. You had Kansas City coming up to River Falls, Wisconsin. We had the Cheese League up there with Green Bay. We also, I think it was St. Louis, maybe, and then maybe the Chicago Bears not far away. All of us up there. And every once in a while, you'd get those practices. 21 of the 31 teams back in 2000, and there were only 31 then, but 21 of those teams would go out to somewhere fun, somewhere at a school. They're doing the whole thing where you're eating, you've got a dorm room, you're eating in the dorms, the cafeteria, you got your own chefs there, of course. That's not so bad. It's football 24/7. But 2021, COVID, blah, 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 only 6 teams went to these, of the 32 teams then, went to these travel away camps where you're going to some university somewhere that's very, very small, or it could even be a college. Matter of fact, 2024, it's actually up a little bit. 8 of 32 teams are going on these camps. I think personally, it makes sense. It brings guys together. They're all hanging out. It's not as convenient as being right in Kansas City, right in Minneapolis, right in downtown Chicago. It's none of that. And that way you get everybody together. You get that whole thing where there is this brotherhood that you piece together as a team. I like that a lot. And I think the other thing is, I don't know if I agree or disagree, but it certainly has worked. But when you look at Kansas City and you look at what the coaches decided to do there, John, they do not do these practices, these joint practices with other teams. Now, he says, look, that's what the preseason's for. Everybody knows there's a preseason. Well, what the preseason's for is to try to figure out who's going to actually make the teams and all the rest of that. You already know who the starters are going to be, but you got to see who some of these backups are going to be. And he believes that that's the spot to do that. I don't know if I agree with that, but certainly a guy who's won a lot of Super Bowls probably would be the right one I'd follow. But what do you think about this whole thing, John? Do you think that they should be doing that? Hey, looks like we lost John. Sorry about that, but we're at the end of the show. It's been a great week. We look forward to seeing you next Monday, 1 p.m. Eastern Time for the Rebel's Edge.